TheoTrade. This is Don Kaufman, July 14th, 2021. 8 minutes to go to the cash close here on this Wednesday afternoon with the S&Ps up about 7 handles. The Nasdaq running fairly hot once again, up some 40 handles. And the Russell, the little engine that could, getting crushed down about 1.6%. You know, some of the trade action today, though, really begs the question of the markets turning on the Fed. And that is a specific question geared towards the fact that, you know, this morning, Jerome Powell came out with some prepared commentary. When that commentary came out, again, I'm just going to kind of detail a little bit of the trading session. When that commentary came out this morning, originally prior to the market absolutely loved it. And that is a critical point to where, if you read into some of the commentary from the Fed, specifically this is Chairman Jerome Powell, those comments were, it's all about sustainability, of course, of the Fed program, the bond buying program, and low rates pretty much until, well, forever. Nevertheless, the marketplace turned around after the cash open, saw some pretty significant sell-side activity, bounced back up, but here we are again coming into the cash close. And, you know, the only thing you can really see right now is just instability in this. And I have to tell you, as a trader, I'm a little surprised because the comments out of Jerome Powell could not have been more dovish. Now, let's not put too much of an opinion piece into this. Let's actually dig a little bit into the markets. Those dovish comments, well, what did they do? They rallied the bonds and rallied the bonds quite significantly. In fact, rallying the bonds, if you take a look at the 10-year interest rate component, well, the 10-year now is back down again to 1.356. So we are definitely off some of the rates that we've seen, off the bottom of the rates that we've seen, which is all the way down to the 1.283 level. Nevertheless, we are headed back in that direction. So the comments from Powell, of course, caused a bit of a rally in bonds, but that rally was not immediate. It's been throughout the course of the day. You know, the thing that I'm starting to question, though, and this is kind of the trader in me, are traders actually rotating into bonds? Because this wasn't a knee-jerk reaction based on Jerome Powell's commentary. And the point that I want you to think about here is, again, Jerome Powell comes out, has incredibly dovish comments, interest rates low forever. They're not going to taper out the bond buying program. You would have thought the bonds would have just spiked on that, right? Taking interest rates lower. Instead, this has been a very, very gradual, move to the upside, which to me looks a lot more like hedging activity. And again, that's more of an opinion piece than anything in there. But the impact of the bonds just cannot be reiterated enough. So the bonds rally on some of the Jerome Powell, commentary. The dollar backs off. Now, there's a multitude of reasons the dollar is actually down today. The dollar reaction, and I just want to detail this as well. The dollar reaction, yeah, it definitely came off of some of his comments, but the dollar was already seeing sell-side activity, but that actually had to do with discussion of a congressional bill being passed for a spending bill of another $3.5 trillion, and the dollar saw some sell-side activity on that. Okay, push that aside for a second. So the bonds rallied, well, again, quite significantly, but it crushed a little bit of the financials again. Now, the financials have recovered to some degree. They're only down about 0.5% today. But if we bring this up in terms of auto-expected moves, and the reason I say like, oh, no, the financials got crushed, you have to recognize the financials, not only off the lows, they actually hit the lower edge of their expected move and effectively bounced off of that. But is the marketplace, again, is it turning on the Fed? As you look down the list, some of the usual suspects, there are some key underlyings, even inside of the Nasdaq. If we take a look at the monsters of tech, the monsters of tech, of course, is our conglomerate symbol of Microsoft, Amazon, Facebook, Google, right? All compiled in Apple, which is, hot as can be today. But, for the most part, you start looking at the individual products, and it's Apple that's literally carrying the marketplace. Of course, Tesla, just wanted to detail this. Tesla coming off pretty substantially, actually lower on the week overall. Another critical stock to the Nasdaq right now is none other than Nvidia. I'm going to tell you right now, you watch this product for the remainder of the week. Nvidia may have actually had a full-fledged reversal here. We are seeing some sell-side activity again in Nvidia. It is now down on the week. I mean, for the most part, you see some wild reversals. Even products like Amazon, we'll come to Facebook here momentarily, but products like Amazon on the trading session still not really propagating any gains. As I was saying, specific to Facebook, push all news aside, Facebook seeing again its high tick pretty much at the cash open. So again, really positive comments from the Fed, or at least comments that have been positive for the market in the past, are not necessarily so positive right now. Where else could I actually point to a degree of weakness here? Well, again, we looked at the financials, but I'm just going to be frank in saying that the financials, these things have been, beaten and bludgeoned quite considerably in the last couple of weeks of trade. There's no question in the shorter duration here that the trend is down. If you take a look at the energy sector's also had a fairly rough ride, but today is actually a reach to the downside. If we click on auto expected moves, you're going to see, again, we're well outside the expected moves, right? There are some marquee products right now that are clearly taking heat. And the Jerome Powell, some of the testimony is going to continue tomorrow. And the follow through to the marketplace, literally over the next 2 days of trade, I believe are going to be absolutely critical, which actually brings me to the point. And what I do each and every Wednesday here is we take a look specifically at expected move and expected move in the week. And one of the things I want this to kind of resonate with you is that, the marketplace, when I talk about expected move, this is what the option marketplace depicts, okay, the overall movement on a given week to be. And in this particular week, you were looking for plus or minus approximately a $64 move, right? So where are we at right now? I mean, for the most part, nowhere. This week right now is massively unchanged. I mean, for the most part, what have we seen? A little bit of up action on Monday. Tuesday took us right back down. Today we're going to finish, again, largely unchanged with 38 seconds left on the clock over here. So where does that leave us on the week? For the most part, between Thursday and Friday, you're literally looking for like $64 of movement. Now, one thing I like to point out, we don't necessarily have to move up $64 or down $64. We don't. However, if you look back at most of the weeks, in any given week, we tag the edge of the expected move. We tag the edge, we tag the edge, we tag the edge, okay? It is unusual not to hit the upper end or lower edge of the expected move. Of course, there's a probability of that not occurring in this particular week. There's the closing bell. It is a possibility of not hitting the upper edge or the lower edge of the expected move in this week. Nevertheless, okay, another closing bell. Nevertheless, I think you have to consider it. There's going to be some volatility in the next 2 days of trade. I believe that the bonds are already looking for degrees of the volatility. In fact, the bond market itself might be ahead of the picture here. The bond market rallying could be actually a defensive position. Another aspect that I picked up on, there's not a huge amount of volume done in the VIX today, but over the last 2 trading sessions, the VVIX once again is approaching the 120 handle. Listen, okay, the entire trading session turned into, well, a veritable slop fest. After the S&Ps were up fairly significantly, the Nasdaq is up well over 100 points today. Okay, the Russell cannot be overstated in this particular picture. If we take a quick glance, of course, at the IWM, seeing some really strong sell-side activity. Is this going to start to spill over to the remainder of the marketplace? And more appropriately, I think that this is going to be seen if markets are going to get volatile. Listen, it's going to be worn like a badge of honor inside of these volatility futures. So look for it. Thanks everybody here for joining us at TheoTrade. Have a wonderful evening. Bye-bye.